Welcome back to our show, your show, Let's Talk Stocks. On Zoom with us today is Stephen Davis. He's Vice President of Sygnus Capital Investments. And as you know, Sygnus has been making big moves out there in the financial market. Stephen, welcome to the show, man.
Thank you, Sir Neilson. Thank you so much. Thanks for having me today.
Stephen, Sygnus has a number of companies. Sygnus Capital is the one you're representing. Talk us through that, how you differentiate a little bit from the other Sygnus companies.
Okay, yeah. So Sygnus Capital represents a group of companies that is an alternate investment platform. So that is where all of the employees and the brainpower is. And under the Sygnus platform, we have a number of ultimate fund companies that have specific investment themes. So we have our private credit vehicle, which is our Sygnus Credit Investments. Our real estate project financing vehicle is Sygnus Real Estate Finance, and our private equity vehicle is the Sygnus Deneb Investments. So Sygnus Capital is essentially where all of the brain power is, the investment banking, the management, our wealth arm, all of that sits on the Sygnus Capital and manages the other fund companies from Sygnus Capital.
Quite an interesting structure. You have deployed over $50 billion, $53 billion already. Talk to me about the impact of that, how you're seeing it, and just what caused you to be doing that volume of business.
Very good question. So in terms of the volume, we're very happy with it. In 2023, the volume was closer to about 42 billion. And the target was really to get it, over 50 billion. So we were very happy with that. Continue to see a lot of pipeline deals. Ultimately, Sygnus was formed because there's a lot of underserved businesses here within the region. And that's why Sygnus as a whole was created. So we continue to see immense pipeline opportunities. Last year, we would have probably executed close to 46 different transactions, totaling that 53 billion. We continue to go out there and source these opportunities, analyze them well, structure facilities for them, and get them funded.
Stephen, how does Sygnus really help businesses? Because you're configured, you took a route which is a little different from other investment banking type companies. How does Sygnus really help businesses to grow and expand, access capital?
Okay, so very interesting. So yeah, our investment banking team is structured a little bit differently. We have, within our investment banking team, we have the arm that is focused on capital market raising. So raising of whether debt or equity capital, whether private or public. So, your typical private placements, whether it be IPOs, APOs. So we do that both for our internal funds to be able to invest through one of the fund companies, or we actually do it for external clients in a similar manner. But outside of that, within our team, we have our credit solutions team, which specifically structures investments for those three vehicles that we would have spoken about. And when it comes to that now, those investments are almost tailored. I would put it to you that it's akin to essentially going out and buying a ready-made suit that you probably fit versus here. You come in, we discussed all the issues, and it's literally built on site. It's tailored to whatever solution is needed for each client. And I think that is ultimately what sets us apart. We have significant funds under management that allows us to execute dependent on whatever the need is. So if it's as I said, a private credit, which is anything within the debt space, from senior secured financing, mezzanine financing, preference shares. If it's on the real estate side, whether it's a debt or an equity investment that is needed to support our project, or in the instance of private equity, we take minority positions to strategically support businesses here in the region.
a lot of what you describe are in the what we'd call the alternative segment. Why would Sygnus choose to look at alternative investments? And how important is that for Jamaica and the region?
So again, another excellent question. So the alternate investments ecosystem is very important within any economy, and no much so here within the region. We have been trying to be the industry leaders in terms of building out that alternate investment ecosystem. So traditional financing will continue to stay and forms, very important feature. Early stage financing is another area that, is needed within the overall ecosystem, but that alternate investment that allows for the financing of deals that the traditional market at the moment cannot necessarily touch, helping medium-sized companies to grow so that they are able to access traditional financing and continue that multiplier effect in the economies of the region. That is really why we were started. We were seeing a lot of, as I said, underserved businesses, good businesses with good ideas, good growth plans, but unfortunately, because of the traditional sector, how it's set up, sometimes the bureaucracy, sometimes the additional collateral that is needed. The alternate investment sector is there to provide what we call flexible capital to help these medium-sized companies grow and increase their overall size and capability, that they are now able to take on traditional financing and continue to grow those businesses.
Stephen, you spoke a lot about underserved, areas, underserved sectors, underserved companies. And I noticed that you're very focused now also on renewable energy. Talk to me about why you chose renewable energy and how will that help? How important is it to fund renewable energy projects and how that aligns with your overall goals and objectives?
Yeah. Excellent point. So, to take a step back, not just renewable energies. At Sygnus, the overall group is focused around what we would say is impact investing. So that's really a lot of the goal, to look for, sectors that will drive high impact, with us helping to invest this capital. And the renewable sector is one of those sectors that we see key. There's a lot of multiplier effects from investing in renewable technology and boosting that capacity that will have for the region, the countries of that region, because it really impacts, if you think about it, energy costs. And energy cost is a significant part of many businesses across the region, many households. And if we're able to drive down those costs and significantly save, that now provides a platform not only for those businesses that we invest in, but all the businesses across the region. So we look for businesses, that, as I said, that have high impact, that will help us to add to that multiplier effect. Us investing in this one business affects several across the whole region.
Stephen, we are at an interesting crossroads in our different economies, locally and internationally. Over the last couple of years, there was this big battle to get inflation under control, rising interest rates, and then now we saw central banks leveling that off. What are some of the challenges right now and trends that you're seeing in the investment banking scene locally and internationally, and regionally, sorry?
That's a very packed question. We've seen a lot of trends, no more so than the emergence or the increase of the need for alternate investment financing. So whether it is through private credit or private equity type financing solutions, that is a significant trend that is not only here within the region but more sophisticated markets. It's started to increase during clearly the pandemic, as a lot of the traditional financiers pulled back, but essentially that it has continued to grow coming out of that, I guess because of the support that they got, during COVID. Now, in terms of here specifically in the region and for us locally, we've seen a jump in terms of what we would say in terms of support for receivable financing or receivable factoring. That's a product or an area or a trend that has definitely been growing. And if you think about it, supply chain issues coming out of COVID have hurt a lot of persons, which would have affected the overall timeline that persons are able to pay. And in terms of receivable factoring, we've been able to come in and tailor solutions that help persons to even out that liquidity issue that they're having. So that's a specific trend that we've seen. We've also seen, trends within, as I said, outside of renewable energy and a push there, large infrastructure projects. So we've, supported a couple of those over the last couple of years that has developed or brought high impact to the region, not only in jobs, but in terms of overall improving logistics for the countries that those projects have been in. I think those are some of the key areas at the moment. On the what we call the capital market side, a big trend is around inflation protection. So a facility that we would have recently done would have been, similar to the NROC bonds. It would be inflation protected bonds here within our local capital market space.
You've looked at high impact infrastructure projects, but you're also in real estate. Talk to me about how the investors are utilizing these two areas, especially real estate and the projections for real estate going forward.
Okay, yeah. So in the real estate space for us is again another interesting space for us. It's multifaceted in terms of there are different ends that need supporting. So within the commercial space, there is a surprisingly coming after COVID, there's a large appetite and demand for commercial space, whether it be within the warehousing, so as manufacturing capability or essentially service sector that has products coming in and the need for warehousing space. That is something that is big for us. So we have invested a lot in trying to find projects that build out this warehousing capacity for us that is within a space that allows for clear logistics and the sinking of that overall space. Outside of that, we've looked at affordable housing. So we've invested in a project out in St. Ann that is geared towards affordable housing, which is another key sector that we see for our subsector within the real estate space that there's significant demand for at this point in time.
One of the things, Stephen, as we look at your trajectory and your path that you're following, I get the impression you understand very well there's only so much that you can do here locally in Jamaica. Your expansion plans across the region, talk me through that strategy and how you see it driving return on your different portfolios going forward.
So, I mean, real and truly, Sygnus, even though we have invested significantly here in Jamaica because we have a large presence here, Sygnus is a regional firm. We actually have offices in St. Lucia, Puerto Rico, Jamaica, and now in the US. And we are in, I would say, over 12 different countries across the region, across all spaces, meaning private equity, private credit. And so whilst Jamaica has been important to us and will continue to be, given that we have a large presence here, we really see being a regional firm, it's really about driving the overall impact of the region. And hence, last year we would have been named as the investment and the co-managers for the first Caribbean resilience climate fund here in the region, and that's a $135 million fund. It will be split between a debt portion and an equity portion, focused around areas such as climate, fintech, affordable housing, all of those areas that are focused around the same things that we spoke about, impact investing. So as we continue to grow, that will be a large focus of us. We're just in the late stages of closing off the capital raise for that, which has included a lot of multilateral partners to help pull that together. So that first close will be within another month or so. And as I said, at the end, over the next couple of months, we would have raised a total of 135 million for that fund to drive investments, not just here in Jamaica, but across the region. That's a regional fund. So for us, when looking at investment banking deals, our origination has focused around building partnerships within the region. So we have partners within the Dutch Caribbean, within the Barbados space. Bahamas is an next region that we have a significant amount of pipeline. We've done significant amount of business origination also within Guyana. That's a space that we're looking for. We're looking keenly to make our first investment there. As you would figure, it being that going to be our first investment, we're carefully choosing what that first opportunity is. So we develop a lot of partners within the region, and we work with them on the ground in order to get very comfortable with the risk as we deploy that capital.
I'm happy you went there, Stephen. I'm happy you spoke about getting comfortable with the risk, because certainly looking at alternative type funding, the way that you've done it, certainly you've had to embrace new risks. How do you manage to get that right balance, between the risks of looking at bold and new initiatives and funding and taking on areas where others fear to go?
Very good point. And that is true. So within this alternative investment space, and especially, mezzanine type financing, the risk is generally increased. But as we would have stated before, it's our solutions are tailored, not only just for the client, but in terms of what we would call a risk adjusted return. So we are very meticulous in both structure and something that meets the needs of the clients, but essentially that we put certain measures in place in our facility that allow us to mitigate the risk. So from all levels, from a structuring standpoint, we're looking at all elements within the risk, and a key area is around having good knowledge around who the issuer is, who the person that is taking the capital that is of good character. So in some instances, these companies may be younger in their scale, but they are part of a group of companies. So we call them that there's a large sponsor behind it. So they may be a smaller company with a larger group of companies, but there's comfort provided there, because there's almost like an implicit guarantee given that there may be some amount of reputational risk to that firm. So that's one of the ways that we look at, overall mitigating the chances of losses. We go through very meticulous due diligence very quickly, but still meticulous in terms of our due diligence process in understanding the business and what can possibly affect it. And then based on that, what are the major risks that may be posed to this business being successful? If we are unable to mitigate away the significant ones through our structure, and then it's likely that we do not participate. But if we are able to, most time, often than not, we find a solution there and we proceed with that particular investment.
Great, Stephen. What's next for Sygnus?
Excellent question. I mean, the next thing is to continue to grow within as I said, the impact investment. I think you keep hearing me talk about impact investing, and we we speak about it sometimes in the region and talk about the impact, but true impact investment, which we're moving towards, is something that is measurable. So the new impact fund that we're talking about, it's not just about, we're doing it in sectors that create an impact. But essentially, we have it's built in now with a resilience scorecard where at the start of the investment, there's a projected impact that is, brought forward when we're putting forward that investment up for proposal, and that is measured right throughout the way. How many jobs are being created, what sectors are being impacted, what is the throughput to the economies. That impact is actually now being measured so that over the life of the investment, and by the end, that can be stated. So impact investment is, the next tier of what we want to continue to drive within the region, where persons are being held accountable for the capital that they're getting in terms of the impact that it is coming across in the economy. And no more so than, renewable, as we said, a sector like renewable energy. You can see the direct impact of that in terms of, if it's bringing down the kilowatt per hour cost. You will definitely see the impact of that overall in terms of infrastructure. If it is down to reduce lead time in terms of moving around goods within a particular sector or space, that again is a key area for us.
All right, Stephen, I want to thank you very much for chatting with us today. We're looking forward to continue the discussion in the near future.
Yes, and I hope the next time that it will be in person. I was looking forward to coming down to your studios, but next time.
All right, absolutely. That was Stephen Davis. He's Vice President of Investment Banking at Sygnus Capital Investments Limited. And as we always say here on Let's Talk Stocks, we give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another wonderful program lined up for you.